Nick Hershey. I am the president and founder of the Mortgage Calculator. We are a lender that works a little bit differently. We love to operate in the non-QM space for alternative income documentation. I'm joined today by my co-host Kyle Hershey, our partner and COO, and Jose Gonzalez, our sales manager with 27 years of experience. We'll go through a little bit more details about some of our specialty programs. So we're a lender that works with over 100 different banks and partners and outlets to find the best deals for our clients. So one of the programs that we specialize in, and one of the great things that we love doing about the non-QM programs, is that even though today markets are closed, everybody knows we were live today on Monday. The markets are closed, so most of the banks and partners are not open right now. But in the non-QM space, we can still price and look at different loan scenarios and whatnot. We also have a few bank partners that are offering regular rates as well. But today we want to focus a little bit on a specific program that we have that we really love for our commercial investors. So let me show a little bit about that. So we've talked about this a little bit before if you've watched some of these shows, but we love to do DSCR loans for our investors. Now, what does that mean? That's a no income, no employment loan. What we're going to use is the debt service coverage ratio, which is a ratio we calculate for a rental property to compare the rents to the income, for the income of the property to the expenses. So we can do these for regular 1 to 4 units, but what we want to talk about today is our specialty product that is for small commercial, which is 5 to 8 units or 2 to 8 units mixed use. So we can still use these great DSCR programs. Hopefully you guys have learned about those, or if you're a new loan officer, you're just learning about those. These are great opportunities for investors. And for the small commercial, we can still use the similar programs and not have to go to a full commercial loan. So these do have a little bit different income LTV limits. So 75% is the LTV limit for both purchase and cash out when we have a large commercial property, larger commercial property. No income employment, as we mentioned before. There is interest-only options available. Most of them are 40-year fixed DSCR loans. We also have the 10-year interest-only 40-year, where it's 10 years of interest only, and then a 30-year fix after. So a few different options. Obviously, these are going to close in a business. These are business purpose loans. And typically these options for small commercial are going to be for 660 plus credit for these great simple DSCR programs that we can price instantly. So we'll go through the rest of the presentation today. We'll touch back on this in a minute as Jose is going to pull up the live pricing on this specific program. But first, let me go ahead and get into our regular rates and see some of our banks and partners that are still even offering rates today, even though the markets are closed. So let me go ahead and share my screen here. So this is a tool that we've built for our loan officers and for our team to be able to price loans. So this is, again, a tool for mortgage professionals. We're just going to go over some basic scenarios today. So remember, if you need a full quote and a full loan estimate for your specific scenario for your borrower, please get with one of our licensed loan officers that can use these tools and these instant pricing tools that we have to actually issue you a full quote. So today we'll just do a couple examples just to check out what's going on in the markets and see that some of our banks are still offering rates for us. So typically we're going to do an 80% purchase, which is a typical scenario. We're going to do a desired price of 1 point buy down because the rates are a little bit higher now. We typically have our customers request to buy down the rate a little bit to get a little bit better rate because of the environment today. We're going to price a quick conforming. We also have other options. We'll talk about our non-QM expanded in a minute. We also have FHA, VA, and USDA as well. We're going to do a purchase for a 30-year fix, pretty much what everybody's used to, a standard scenario. And we're going to do primary, single family, 1 unit. And for all of our scenarios today, for the next couple minutes, we will use Florida, Miami-Dade for our examples. And we're always going to use a 760 estimated FICO and a 40 estimated debt to income ratio in order to get some quick pricing. Again, please get with one of our licensed loan officers if you want a full quote just for your exact scenario. But this is a great option for us to check out what's going on in the market today. As you can see, this is an actual live tool. So let me get past the check. And let's see what we have today. So this is a typical conforming conventional product, but this is a home ready. This is a specialty one that does have to have our borrowers meet some median income requirements as well. So let's scroll down to the first regular conforming option. So it looks like right here, some of our banks that are open today are offering a Fannie Mae 30-year fix or a Freddie Mac 30-year fix for the same price here. 6.875 rate is going to cost 1 point in buy down today. And remember, the markets are closed, so these are probably a little bit higher than what they might be tomorrow when everybody's open. But we just always want to open our show and show what's available right at this very minute from our hundreds of partners. And you can see we have tons of partners that do offer programs right now. So just tons of options that we have available if you're looking for options. Now, again, because we love working with tons of different partners and tons of different types of borrowers, let's go through some other options. So the most popular request besides a conventional loan would be an FHA loan, where we can go a little bit higher on the debt to income ratios and have a little bit more relaxed guidelines. So this would be kind of the next best thing if for some reason a borrower cannot qualify using the conventional guidelines. So we always want to run through this real quick, doing the same thing at 80 LTV, primary purchase, everything else staying the same. Let's just check out the FHA options real quick. These are obviously very popular for people comparing purchase options. So for our banks and partners that are open today, we have a FHA 30-year fixed, a little bit higher rate there. For a par rate, relatively no cost there. Here's another par rate of about 6.125. Things to key in on when you're looking at the FHA programs are the APR, because there are some additional costs involved with the FHA programs. So we always recommend get with our licensed loan officers. They can explain a little bit about the additional costs for these programs, but they do open options for our borrowers who don't otherwise qualify for conventional financing. Now, what gets us really excited here at the Mortgage Calculator are our non-QM options. So let me pull this up again. And under loan type here, we obviously have FHA. If you do qualify for VA, that is amazing. We appreciate all of our armed service veterans. If they qualify, great. We do have those options, but not everybody qualifies for that, so we won't go through that today. Same thing with USDA. The property must be in a rural area for a USDA loan. If you do have a property you're looking at in a USDA area, please contact us. We'll quote it up. And if you do qualify for VA, please contact us and we will quote it up. But the options beyond conforming and FHA that are most popular are our non-QM expanded guidelines options. So these give our borrowers who don't qualify for either conventional or FHA loans the opportunity to still purchase homes at great rates with great terms. So we'll see here, we'll do the same thing, 80 LTV, 99, so a little bit of buy down here. We'll do primary single family, Miami-Dade, everything else staying the same. But you see now that we're doing expanded guidelines, we have alternative income we can use. So all conventional loans use full documentation, but when we go to alternative docs, we can use other things such as assets, bank statements, and a few different other options. Our most popular option for non-QM that we'll pull up here is our bank statement option. So if a borrower is self-employed and maybe doesn't quite qualify using the conventional guidelines, but they still make great monthly income on their bank statements, we can use those bank statements, 12 months of them, to determine the debt to income ratio for that self-employed borrower, and using our partners and banks that are offering these programs. So we'll go ahead and check this out. Obviously, these are non-QM programs. These are banks offering specialty things, so these are going to be higher rates. But again, it opens up opportunities for our borrowers. So you see here we have a bank statement program ranging from 8.625 rate for about 1 point in discount to a bunch of different programs. Remember, every bank, every partner is different, and they're going to offer different alternatives with different rate and cost combinations. So this is where our loan officers are great. They can navigate you through all these different options. You see there's dozens and dozens of different bank statement programs. So we want to make sure we put you in the right program. But you can see our rates are ranging here from anywhere in the high sevens, low sevens, to eights, nines. It varies, right? So this depends on other things such as credit events, right? We can still do non-QM programs for people who may have a credit event such as a foreclosure or a bankruptcy in the recent past, where conventional guidelines will not allow that. So we do have a ton of different alt doc programs. Please get with our team if you want to check those out. Now, the final thing we want to go through here real quick on the live rates for today are our investor options. So when we pull this up to 80 LTV, we'll do again 1 point of buy down. Let's go for an investment property. Now, conventional conforming loans do have a large penalty now, basically, from the GSEs, the government organizations, because they're not don't have an appetite at the moment for investment properties. So we'll see here, compared to a primary home, an investment property does have quite a bit more cost. So we'll do a conventional option, ADLTV, investment, everything else staying the same as we did before. And real quick, let's pull up the rates this morning. So you can do a conventional loan if you qualify. That is amazing. But notice there are quite a bit of discount points or costs or fees. These are because the GSEs are adding additional fees basically to these programs. So just keep that in mind. Still great options, 7.625 rate for quite a bit of discount points here. Most of these are going to be a challenge to pass compliance. So please get with our loan officers that can find the best combination. Because some of these high point options, obviously, we wouldn't want to get our customers involved in anything like this, right? So make sure you get with our loan officers. They can find the program that best fits. But you see here, conventional isn't as attractive as it maybe used to be. So that's where our amazing non-QM programs come in. So when we have an investor that comes to us that wants to purchase an investment property, a lot of people are doing, for example, short-term rentals. For investment properties, it's a very popular request. We get daily dozens of requests for this every day. Conforming is a less popular option every single day. So our team specializes in non-QM, so we can use expanded guidelines and other alternative forms of income in order to get these investment properties for our borrowers. So if we keep everything the same, we're going to go to expanded. We're going to see a couple new options under income. And then we're also going to see options under prepayment. So whenever you do a rental property or an investment property as a non-QM program, we're always going to add a prepayment typically. So we'll do a standard 3-year prepayment penalty. And we can use alternative documentation in order to purchase this. Typically, the most common request, again, is bank statements. But Jose is going to go through some specific DSCR programs here, as we mentioned before, which just use the property rent income with no income, no employment required, and just use the property rent to qualify that loan. But our most common request here is business bank statements when we're doing a investment property for typically self-employed. These would be realtors, people in the gig economy, but are also investors as well, and maybe don't want to use full documentation or maybe can't qualify using full documentation for those loans. And we'll see all these great options we have for investment property purchases. So this is one of our banks and partners offering this program, 8.625 rate. Again, amazing rate, almost similar to the conventional options as you just saw, and obviously less points because these are banks and partners that are offering their own programs, and they don't have to add those additional loan level price adjustments or penalties that we see a lot of times on the conventional loans right now. So great options for less discount points, a little bit higher rate, but these are great options for our borrowers. Again, we have tons of options. Please get with our team. And they range from, as you can see here, the 8s all the way up into the 10s in case you might have had a credit event or something else that may be requiring you to go into one of these specialty programs. Now, as we mentioned, our most popular loan product is our DSCR product for our investors, and that is where we don't need any income documentation whatsoever. So if we go expanded, investment, and we go to our investor DSCR program with a standard 3-year prepayment penalty, this is our most popular loan product here at the Mortgage Calculator. This does not require any income or employment documentation from our investors, so they can buy multiple properties at the same time, have multiple loans going at the same time, have a cash out refi to then purchase another one at the same time. This is a great tool we have where we don't have to get clogged up with income documentation and underwriting. We just have to get an appraisal with rent income. So these are our most popular programs. This is for a standard 1-unit single family. So we'll see here some options that we have ranging from the 9s right now. Obviously, we can buy it down lower, which Jose will talk about. And we just have tons of these options. Even today when markets are closed, we have all these rates and options available for different programs. So a ton of different DSCR options. Please get with our team. These are a little bit tricky. You can see everyone's a little bit different on the ratios and special terms and prepayment penalties. So please get with our team on that. And Jose will take over here in just a second and show a specific example of how we use these quotes for our basically small commercial program. So as we mentioned before, we have the 5 to 8 program, which I can't price instantly here because, as you notice, when we're using any regular pricing tool, 4 units is the standard max for a residential property, right? So these quotes are all instant. We can instantly quote you on these ones with the standard tools, but there are some specialty tools with some of our specialty investors and banks that we have where we can quote those, as I mentioned before, 5 to 8 unit small commercial properties and the 2 to 8 unit mixed use properties. So Jose, do you have your demo here ready?
Yes, sir.
Okay, let me take my camera off. bring you to the front. So this is Jose Gonzalez, our sales manager, 27 years of mortgage experience. And when you're ready, just let me know and I'll go ahead and share your screen, bud.
I'm ready, sir.
All right. So there is your example. Perfect.
All right. This is an especially special, pun intended, program that we have. This one is one that really makes most people's heads spin when they find out that this one is available, right? When we tell our investors that we can finance their 5 to 8 unit property with the same guidelines that we finance a 1 to 4 unit property without having to have those zip code worries about being in a low population density area where commercial loan will probably not be possible. I think it's like 25,000 or less people per square mile, something like that. This option totally circumvents that. So this is for a 5 to 8 unit, and it's also even better possible for a 5 to 8 unit that's also mixed unit, where up to 50% of the units can be mixed use, because you do need a minimum 50%. I mean, it can be commercial because you do need a minimum 50% of the units to be residential. But if you notice in this example, you were throwing around some DSCR rates there. You look at what you have here. You can go as low as 9.125 with no discount points, and you can buy it down to 8.5 with I believe this is 2.25 discount points. This option is maximum LTV of 75%, but still great option. The program does require a 5-year prepayment penalty. So without the 5-year prepay, you won't get any hits for this program. But with the 5-year prepay, here we are. Very, very good rates. It does require a minimum DSCR of 1.1, which means that your rent, the gross market rent for the complete 8 units, has to be at least 1.1 times the complete housing expense, PITI, and if applicable, association fee. But I don't think there's any association fees applicable on an 8 unit property. So here you go, man. 9.125, low as 8.5, and you probably can buy it a little bit lower than 8.5, probably into the low eights. With this particular conduit, they don't have any limit on the amount that the borrower can pay to buy it down. So if it is an option to, let's say, pay 5 points to buy it down to 7% or whatever, your buyer is allowed to do that, because this is like a hybrid product, which is treated like commercial for some things, like no tolerance for your fees for buying down, but it also doesn't have the issues that you may face with a normal commercial, like I was mentioning, zip code. And that seems to be one of the big challenges, because we do find that these 5 to 8 units, that when they are obtained at really good prices, usually tend to be in a lower population density area, where doing a regular commercial loan would probably not work, but where this hybrid product that we have does offer solutions. So at the Mortgage Calculator, we are all about providing solutions to our investors who count on us to be their loan consultant in this process. We are not application takers. We are not quote bots. We are loan consultants, and we are eager to provide all the solutions that you need.
Can you just go over the general terms here one more time, Jose, now that I got it on the screen, just to go over kind of the general program, since we got specific, but...
Sure. Well, I was mentioning the minimum DSCR is 1.1, which means that your gross rent, has to cover your housing expense, total housing expense, principal, interest, taxes, and insurance, by at least 1.1 times. It does require a 5-year prepay. It is DSCR. So no personal income or no personal employment verification required from the borrower. The borrower and the property will be qualified on the gross market rent divided by housing expense, PITI. So that's pretty easy. Like every other DSCR program, we're going to analyze the borrower's credit and we're going to analyze their assets. We're not going to worry about their income at all. So very easy loan as long as your borrower has credit.
Beautiful. All right. Well, let me introduce Kyle. You can just close us out and just let everybody know how they can get in touch with our team.
Yeah, absolutely. So as Jose was saying, I just want to touch on what some of these things mean, right? So first of all, if you're an investor or maybe you're a realtor or loan officer and you have some clients that are investors, what do these type of things mean? Instead of purchasing one of these 5 to 8 unit properties or even 1 to 4 cash, you can now finance these properties and buy 2 or 3 or 4. You can also cash out properties that you may have or even properties that you may purchase to purchase more, right? And this is without any income verification, without any job verification. So as Nick said, now we can do multiple properties. We don't have to worry about all those kinds of things. So amazing programs here. We have 350 loan officers all across the country that can help you out. Maybe some of you watching this are already working with one of our loan officers. That's great. If not, you can go to the website down here, themortgagecalculator.com. You can apply on the website. You can also use this pricer that actually Nick went over to price your own DSCR loans. It would kind of give you that control and empower you to be able to price the rates of the DSCR loans live right there on the website yourself. You can also email us at info@themortgagecalculator.com and we can connect you with one of the loan officers. We can do loans in most states and we do have loan officers all across the country. So feel free to contact us, info@themortgagecalculator.com or visit themortgagecalculator.com. We can connect you with one of our loan officers who can not only just help you with conventional FHA, VA, USDA, but our loan officers are trained to go above and beyond that, which most loan officers are not. They can do self-employed income. They can do these non-QM programs, these bank statement programs, the DSCR, and we specialize in investor programs, and non-QM programs. So some of our loan officers can definitely help you out. Visit themortgagecalculator.com. We would love to work with you all. Thank you for tuning in. I appreciate it.
Thanks, everybody.
Everybody have a great day. Happy New Year's.
Happy New Year.